So we're going to start talking about trading plans as they pertain individually to you. Now, has anybody ever gone to the library or bought a book on stock trading or options trading? Anybody ever done that? Well, I'm actually glad you haven't, stock guy. The reason why is you're going to find most of these books were written by guys or gals that, they go to Harvard or Yale for finance. They leave school and they go work for big brokers like Goldman Sachs or JP Morgan. And though they may be successful, they've never had to deal with the emotion that comes in trading their own money. And believe it or not, managing those emotions is probably 75 to 80% of this game. Being able to manage your emotions properly and find a comfort level for your trading. Now, I don't want anybody to think anything other than this as a fact. Anybody that tells you they've never had a losing trade is a liar. Anybody that tells you they will never have a losing trade, well, they're a liar too. They're going to have their place in hell once Judgment Day comes, sitting right there on a fiery throne by Satan. Okay, that's a fact. A good trader is going to have ways to manage their risk, to limit their losses, and make more winning trades than they make losing trades. That being said, should you ever put your entire account into a single trade? Absolutely not. But what if I come in the chat room and I say, okay, listen, guys, I am freaking positive that stock XYZ that's trading at 50 bucks right now is going to go to 100. Should you put your whole account into it? Yeah, not at all. No, no, kid, not even for that reason. Let's put it this way. I've been really sure of a lot of trades, and I've seen them work out exactly as I planned, almost to the penny with my targeting. And I've also seen ones that I planned out that didn't. That being said, knowing how to properly allocate your funds individually is what will keep you in the game. It's going to keep you in the game. The first thing that you have to be able to decide as you are planning for your trades is what style of trading is best suited for your lifestyle. Now, somebody like me that's a professional trader, a full-time trader, I think it's important that you have not only diversity in your portfolio, but a diverse means of your trade systems. Meaning, I will do day trades, I will do shorter-term swing trades, I make long-term investments, I make speculation trades, but I have proper allocations into those. And I don't depend necessarily on any one of them to be the one that will make me rich. If I have to pick the trading system that's made me the most money, it would be long-term investing. It definitely would not be day trading. And that's coming from somebody that many here would probably say is a pretty darn good day trader. Pretty darn good day trader. I can hold my own as a day trader. I can read the charts with the best of them. I can read a level 2 with the best of them. I might have a little more tolerance than others when it comes to accepting movement in a stock. But, when it comes to that, if your idea of how to make it in the stock market is being a day trader, I simply want to tell you that even though I think those are worthwhile tools for you to possess in your arsenal for the war against Wall Street. And I call it that because, nobody cares about your money but you and your partner, me. And that's very, very true. So having a well-adapted arsenal and openness to different opportunities is going to be the first thing that helps you out in your trading. The other thing you need to understand is, what's your current life schedule? So, I especially want some of the new members to interact with me here via private message on this. And let me see. I'm going to send a couple private messages real quick. Make sure I didn't give anybody out that I was wanting here. Okay, so there's a few people that just got a private message from me. And I want you to, if you're serious about this, I want you to answer questions that I might ask via that private message window. So the first question I have for you, and others, if you didn't get a private message from me, it's not that I don't care about you. You're free to send me a private message and get some better verifications on this stuff. But one thing I need to know is, what is your schedule? It's a very important question for me to know the answer to. A lot of times when I'm making my watch list for members, also when I'm planning some trades that I might specifically recommend to you, like, hey, I really want you to get in this one, it helps me to know your availability, because certain types of trading may not be available for you to do safely. So those of you that got a private message from me, why don't you let me know, are you working a full-time job? If you are working a full-time job, what are your hours? This is very, very important, because there are different types of trading that I do and that I alert, and there are easy ways that I could tell you whether or not those styles of trading are for you, or if you should ignore those types of alerts. So let me know just a little bit about your schedule. And I only really need to know your Monday through Friday schedule. I just need to know, actually, if from 9:30 in the morning until 4 o'clock in the afternoon, Monday through Friday, if there are any things that could complicate your ability to trade. And it doesn't mean that if you are working a full-time job, you can't trade. Over half my members never come in the chat room because they work full-time jobs. And when you answer the question, answer it relating to market hours, Eastern time zone. So if you're in California, I think you're, 3 or 4 hours behind me here, market time. I'm in Florida. Yeah, and I know you are, Michael. You got a tough schedule. Okay, so let me go on now by saying, those of you that answered me, it gives me an idea. I actually keep some notes on every one of my members. That way, well, I mean, that's how I remember things. That's how I get to know you. Um, and it helps me also tailor some things to you, especially when we get into, constantly being in contact with each other. Um, the next thing I want to know, especially from those of you that I'm talking with in the private message windows, and you don't need to answer this in general chat, nor would I put it out there. Let me know what amount you're starting with, okay? There's a reason for that. Because no matter what you're starting with, I want to help you plan for proper position sizes. A lot of places, you join their chat service and whatnot, you come in and it's like, okay, I'm lost, but they bought it, so I'm going to buy it. No, I guess they didn't want me to buy it with my entire account, and they just lost money on it. Aaron, I'm retired Navy myself, so pretty cool. Now, I was talking about earlier those books that you might read, and there's some tools about proper diversification, proper position sizes, all that good stuff. And that can be all good and well if you understand what they're actually talking about. And when you don't understand what they're actually talking about, then you're kind of still lost on not knowing what's going to be proper for you. Now, there's a lot of ways to trade. You might have heard of like futures and Forex, and you can actually trade individual commodities. You can invest in physical metals. You can play their stocks, associated stocks in the market. You can buy common shares, preferred shares. You can buy stock options. One thing I have found is that a lot of people with smaller accounts are generally attracted to penny stocks because they can buy more of them with a smaller amount of money. They see more volatility in them, and they tell me, well, coach, I can make more money trading penny stocks. And I tell them, you're right, you can lose more money trading penny stocks. You're exactly right. There's a lot of volatility in penny stocks, and you can lose more when you trade them. And the same kind of goes, with options. There's a lot of volatility. You can lose more when you trade them. What I like about options over penny stocks is it's like penny stock volatility on reputable companies. Reputable companies, but penny stock volatility. Apple might only make a 0.5% move in a day. But I can trade options during that day that may move 2, 3, 400%. And do it quite regularly, to the point where you could almost trade that option daily like a factory worker would perform their job. To trade basic options, which are calls and puts, you would need to apply through your brokerage service for level 2 options trading. Now, when you do this application for level 2 options trading, there's going to be some funky questions on it. And I cannot and will not tell you to lie on it. I'm going to tell you plain and simple how to fill out the application. And Michael, with that, if you listen to the next part I'm going to say, and I'll talk to you afterwards to see if you filled out the application in this way, and if not, we can redo it, okay? When you request level 2 options trading, it's going to ask you questions like, well, how much experience do you have in trading options? Well, if you've never had level 2 options approval, you probably don't have any experience. It'll ask you some questions about, liquidity you have available and this, that, and the other. Now, I want to use this analogy for you. You guys remember earlier I said that in this we are partners, right? We are partners, and I fully believe that. I don't just say it because it sounds good. We're partners. Let's say that you started a roofing company. You've never roofed a house before, but your buddy's got 20 years of roofing experience, and he's your partner in this roofing company. Somebody calls you to ask you about your company, and they say, well, how much experience do you guys have roofing houses? What's going to be your answer? How much experience does your company have roofing houses? Is it going to be you personally with 0 or your buddy with 20? So when you see that application, keep your partner in mind. I want you to keep your partner in mind when you answer those questions. That should assist you in getting your approval easily. I do want to tell you, with options, in the way that I trade them and the way that I teach you to trade them, you don't have to worry about ever losing more than you put in. There are ways with options that you can, and those ways will not be taught or traded here. But that's why the options application asks questions about your liquidity, and that's because if you do the wrong types of options, stuff that we will not do here, you may have to come up with some extra money. So it's a generalized options application that really has nothing to do with the way that we'll trade them. And then we can allow ourselves to trade options in many different strategies that I use. My favorite being a way that I can teach you to trade your account like it has a 0 on the end of it. Literally, your $2,000 account can trade like a $20,000 account. Your $5,000 account could trade like a $50,000 account. Your $500 account could easily trade like a $5,000 account. Your $100,000 account could trade like a $1 million account. And your $800,000 account could trade like an $8 million account. There's a common misconception about options trading that it is more dangerous than stock trading. And I will say with that, that is true. If you trade options deliberately in the way that you are entering seeking high risk and high reward, they can be more dangerous than stock trading. I can also tell you that not all of my options alerts are based on those types of trades, because there are actually ways that you can trade options that make them less dangerous than stock trading, less dangerous than trading the actual equities. And no, it's not my Friday SPY strangle, even though I've been told through some emails that people think that's the safest way to trade. And yes, Kia, that happens. And it happens when people don't teach you the proper way to do it, or at least give you the proper risk analysis on it so that you can decide which way you prefer to trade it. Now remember, everything with me and what I teach you is going to come down to position sizing. Position sizing is essential for many reasons. Let's say I put 50% of my account into every trade I make, and I lose 100% of a given trade. What percentage of my account have I just lost? 50%. If I lose 100% on a trade, but I've only entered it with 5% of my account, what percent of my account have I lost? 5%. It's a very simple thing. And some people say, well, yeah, that's really good with somebody with a multi-million-dollar account. I've got $1,000, and how can I enter trades with less than 50% of my position? Because most places out there are going to tell me that I need to be willing to trade $500 in any trade, minimum. Well, you know, I've got this little thing here called the focus group. If you go up to the top of the chat room, you'll see the notes tab. The notes tab shows a list of stocks, and you're going to be like, Coach, there's $60 stocks on here. And you're telling me I don't need to put at least $500 into them? And I'm going to tell you that I started a little account back there. This is the Monday after Thanksgiving, and with $445.12, and I'm making $100 trades with that account. $100 trades. With the type of trades I do with that account, if I take a win that's less than 100%, that's a failure in my eyes. Plain and simple. If I take a win less than 100%, that trade's not worth talking about. Have I had losing trades in that account? Yep, 5 of them. One of them, I fat-fingered pretty bad. I meant to buy 5 contracts. I bought 50. And I took a 45% hit on that trade. That one sucked. That one sucked. But options are a way that you can enjoy that crazy penny stock volatility while not having to trade very much money. In fact, the past couple Fridays, we've done pretty much the same trade in here, and we're going to continue to do it. We call it the SPY strangle. We buy with $100 at a time. We make 2 buys at the market open, knowing that one of those sides is going to be a 100% loss. You will lose 100% of one of those sides. So why do we buy both sides? And I'll get to that question in a second, Kia. Why do we buy both sides knowing that one of them is going to lose 100%? It's because we don't know which one of them will. Right? Isn't that the reason we open our weekly SPY scalp on Friday, our SPY strangle, by strangling calls and puts? It's because at that open, we don't know which one's going to win. And then the plan is to make 2 subsequent buys. Both of the past 2 weeks, we've only made 1 additional buy once we confirm the winner. And both times, the winner went more than 100%, but we had more than 1 buy on it, which means we made even more than what we lost. And it was fairly easy to do. There's a little Friday fun trade that we've been doing and we're going to continue to do that I haven't had a single person lose money on. Not many people can say that, hey, we make a trade with our chat room and not a single person lost money on that alert. I've seen other services where, hey, we all chased after the same pump and dump, and maybe 15 to 20% of us made money, but nobody else could sell it, so they lost a ton. But it's a trade that every single person that makes it will have the same results. It's with some options, and you will have them, Aaron. Don't worry about it. Now, going back to that options application and talking about our partnership, when it asks you about experience, you need to be at 12 plus years because our partnership has 12 plus years experience. There'll either be a drop-down box or a little bubble to click asking about that liquidity or your net worth. I'm just going to say that because I know why it's there, and I told you we don't make the type of trades here that could cause you to owe more than what you've put into the trade, you can put in your goal. Why don't you put your goal in when you make that selection? And once you submit that application, it'll take 3 to 5 days. And you'll have your options, level 2 approval. And then if there's any issues with getting it, you talk to me and I'll tell you what to do from there. So it's a really, really simple thing to look at. Now, those of you that shared with me what your starting funds are, okay? Real simple here. It's very, very easy for me to tell you a basic set of rules of you should never enter any stock position with more than 10% of your portfolio. You never enter any options position with more than 5% of your portfolio. You can read that in almost any book you go to read, and I do agree with those rules. But some people are starting with different size accounts. So I'm going to send you guys a private message to respond to what you gave me on the answer for how much you're starting with. To give you an idea of where you should be. Okay, I'm not ignoring people. I'm going through this list I have. Okie dokie. So those of you that I've been talking to privately, you've just got those messages on what I think is a healthy amount for you to look at per trade. And I'm going to tell you, a couple of you actually gave me similar answers. Won't that limit my gains? My answer to you is yes, it will limit your losses, okay? You're exactly right. It will limit your losses to trade the size of trade that I just told you to do. So you are right. It could limit your gains, and I am right that it will limit your losses should we take a loss on the trade. I can tell you here that I have had people start out with me with 7-figure accounts. I had a guy a few months ago started out with me, and he said, I've never traded before, but my dad died and I've got this money. And I said, great, I'm going to start you out with $1,000 trades. He said, I want my money back. He went out for a couple weeks, traded on his own, came back, said, let's start this over. I have $600,000 to start with. Okay? So there we go, got those questions answered. And if you will follow those numbers that I gave you, and every month, every 4 to 6 weeks, maybe 8 weeks, we'll reevaluate. You may at that time increase that amount, but I don't want you to increase that amount just because your account may go up. It's going to be essential for us to stick with those amounts because we need to develop a statistic within your account. Okay, if we stick with this position size, how did we do? Okay, we've done this one long enough, and now we have an idea for how the average trade works. Okay, now let's reevaluate a new number, where that number's at, and how we're going to trade it, and move forward from that point. So, do you understand why I'm saying that there? Do you understand where that's coming from? So those proper position sizes are going to be essential. Now there's one of you that has a larger account than the others, but's new to some of this. And I gave you a very small number compared, or percentage-wise, compared to even the numbers I've mentioned here. And that's because with you, we need to first make sure we can handle the emotional attachment to the position size. And you may end up growing your position sizes at a much faster rate than others, okay? So the person I'm talking to, they know I'm talking to them, and we may grow your position sizes faster because the number I gave you is a very small percentage for you. But we need to make sure that you have a feel for how these work, and we can build a statistic within your account of what's the result on my average trade. So when we're looking at how we trade or how we plan to trade and how big we trade, we should never base entering and exiting a trade solely on where we think the stock could go to. That should be a factor, because if you don't think the stock could go somewhere, you should not enter a trade in it. But just because you have a hunch that the stock, or you read on Idiot Hub that some penny stock's going to go to $1 from 0.001, doesn't mean you should be locked and loaded with your entire account in it. Because you need a means to protect yourself to stay in the game. And those are simple rules that I've followed personally. That have really kept me performing well overall. Now, really the goal is to eventually get everybody to really healthy position sizes where they trade the best way to possibly trade, which is scaling in and scaling out of trades. Some of you can't do that, and I know that. Some of you better be doing that. Some of you better not. Let's put it this way. If your standard position size for an options trade is greater than $1,000 and you're doing it all at once, you are a fool. Take that however you want. Cancel your service. I'm sorry. You are a fool. Average up in the position as it transpires, especially in our swing positions. Break, if your planned position size for an options trade is greater than $1,000, divide it by 3, and every buy you make is that size. If it's less than $1,000, I'll say if it's less than 500, you may be just buying and just selling. So everybody kind of understand that? And that's because it is always better. When you scale into trades and you have the ability to do that, and I know not everybody really has the ability to do that when they start out, but when you have the ability to do that, what you find is, let's say an options trade goes sour and you lose 100% of that options trade. If you've only entered it with 1/3 of your total planned position size, how much have you truly lost? About 33%. But if you put the whole thing in there, how much would you have lost? There you go. And let's use a couple examples. I already told you that, especially with an options swing trade, if you're doing a swing trade in options and your profit is less than 100%, if you were to go to a convention of options traders and start bragging about an average win size of less than 100%, you've lost all credibility and everybody's going to laugh at you. That being said, don't you think it's safe to assume that you have ample time to scale into that trade? And thus, you will actually be averaging up in the trade. Very rarely will you average down. I have a thing about averaging down. When you average down in a trade, what you find is your percent lost might be smaller because of your now lower average cost, but your dollars lost gets much bigger. When you average up, your percent gain might get smaller because the average cost that you've paid has gone up, but your average win gets bigger. And when you scale into a trade, by the time you make any buy following your first buy, what could you say about the trade? if you're scaling into the trade and averaging up, by the time you make your second buy, what could you say about that trade? You're already winning. We don't want to sink more money into a loser. We want to sink more money into winners. Plain and simple, as we develop a trade plan, we're either going to be wrong or right, correct? We are either going to be wrong or we're going to be right. And what you may find with me, because I've developed a trust in my system for this, if I've planned to scale into a trade, and with the first trade it fails. Now understand, if I'm telling you that no options position exceeds that number I gave you, for those of you ones that I talked to privately, that means that if we are able to scale into those, that those scaled in buys will be a third of that number I gave you, right? Which also means that, hey, if it fails, we don't need to sit and stare at it and go, oh my God, oh my God, oh my God. We go look for winners. Because with options, you're going to find, it's funny how many of those losers will actually come back and at least break even. Not all of them will. But you can trade them with so little money compared to common stock trades that when you don't keep adding to losers, you're comfortable over time going, I'm just going to hold on to that, see where it goes. And then you concentrate on putting larger money into the winners. Because here's the fact. If I take a 100% loss on a trade that I'm planning to scale into, it's only going to be on the first buy, 33.33333333% of my total trade. But if I take 100% gain in total of one I made 3 buys in, I've made 300% of that first buy. Now I've only got to win 1 out of every 4 trades I enter to break even, right? Now this service isn't about breaking even, because I do pick more winners than losers, far more. But when you use that mentality when approaching your trades, even somebody that's not good at this should be able to win 1 out of every 4 trades they enter. Does that make sense? I mean, I don't think it'd be hard to look at a stock and pick 4 stocks and say those 4 will go up and only 1 of them go up. As a matter of fact, I think anybody could do that. So we need to understand that there is always an inherent danger in the stock market, one that we can't control. I could look at a stock and I could show it to you and we could all collectively agree that that stock is going up. And then it still go down. And one thing that you're going to find too, and we're not going to do this in this segment, but through the video lessons that I have on the website, and then through subsequent lessons we'll be doing here, through the watch list, the video watch list that I will send you to prepare you for trading, we will discuss where the stop out is, what supports and resistance are, where our targets are. And it'll help you to assess the risk to reward ratio. Now let's say I really like a stock, but I see that the support on a stock is 10% below the current price. And I'm talking about common shares. 10%, which means by the time we actually have a reason to stop out, and I'm not talking like, oh my God, it dropped a little bit, we got to sell, and then you watch it bounce off exactly where it should bounce off of, and come right back up to where you bought it at, which was more than what you sold it at. So to play supports is the smarter way. But let's say I'm only comfortable with taking a 5% maximum loss on a common stock trade, even though I can identify a 10% loss potential. How should I make that common stock trade? I'm only comfortable with a 5% loss, but I see that it could bounce, easily bounce, probably bounce 10% lower than the current price. Half in, there you go. I was going to play it with $1,000, but I'm only comfortable taking a 5% loss, even though this could end up being a 10% loss. So now I'm going to play it with $500 because if I take a 10% loss on $500, it's the same dollar amount as 5% on $1,000, isn't it? We can also use position sizes to manage risk, can't we? When the situation presents a greater risk, your position should be A, smaller, B, bigger. What's the answer? Smaller. It should be smaller. Because if your focus is on risk analysis and capital preservation, you're already 100 steps ahead 99% of the traders in the world and 99% of the other services that advertise their ability to help you win in the stock market. If you are focused on what causes you to lose money while allowing the winners to just take place, you will actually find that the prioritizing of your focus level makes you a better trader. I can promise you, I can guarantee you, I will make losing trades, you will make losing trades, and you or I might follow each other into trades that result in losses. I can guarantee you that because I'm honest and I know it'll happen. But I can also confidently say, though you can never make this guarantee, that at least in showing my past, I pick way more winners than I do losers. And if I pick way more winners than I do losers, and I stick to consistent position sizes, what does that say about the growth seen in my trading account? It'd be positive, right? So please, 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 those numbers that I gave some of you privately, write them down. Those need to be your personal trading rules, and we're going to build more rules to that. But your personal trading rules that you do not deviate from, no matter the situation. Why? Because if you are going to hold me accountable for the success or failure of your trading, and believe me, I want that challenge, I want that accountability, then you, partner, need to work with me and not against me. You partnered with me, just like that example of the roofing company. You partnered with me because I have the experience that you don't. But yet you want that experience to help you. In exchange for a pretty small fee compared to what people make here, you get to see returns in your account. So be my partner, not my enemy. Plain and simple.